we started talking about oil, so let's just carry on with oil. I think, but overall, let's just start a sort of a general view of the market. My general view of the market is that the ripple effect of what we've gone through in the first few months of this year means that, particularly for Europe, we are in recession. We teetered on recession back in the last year anyway. We are in recession, and any bounces at the moment I am shorting. However, what the American market are doing at the moment, typical Americans, they get very hyped up about markets in general. It seems to be, from the research I've done on the general sort of mood of America, is that all the key biotechs and pharmaceuticals appear to be making a lot of ambitious noises about where the progress they're making with not so much vaccines but treatments. One in particular is a treatment from, I think it's Gilead.
Yeah, Gilead. So that happened on Friday, didn't it? Yeah.
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 Now they claim that this has a dramatic reduction in the fever and the respiratory problems that it's not. They're not saying it's not a vaccine. They're not saying it's a cure, but they're saying from trials. In fact, I think it's phase 3, isn't it? Phase 3 trials, that they are having a lot of success. So this is broken out of a little squeeze pattern here. So pure technical trading. That was in a little squeeze before we got this break anyway. The break was Thursday, and then Friday we settled back. So actual fact, we saw quite a lot of selling, a lot of profit taking on Friday.
I think if I can come in on that one, I think what happened was that they've only done it for 30 patients. Is that correct?
Is that
they've done a trial of a drug that I think they've either adapted or they already had on the shelf with 30
I think it's one they had on already. Might have been already been on. That's why it's phase 3. I think it's a drug that they were trialing,
right?
And they were just gone into. Hang on a second. Let me just get rid of this guy. And they got as far as phase 3, which is the final phase.
And I think that they found that it actually, in the 30, it had a dramatic effect, but they've all said it's only 30 people, so they've got to test it.
Yeah.
So probably the big jump was when everybody thought, wow, we found a cure. And
anyway,
everyone read the small print and realised.
Yeah, but the upshot of that is that a lot of American markets seem to have jumped on all of this news, not just Gilead, but a few others. And think that at the very least the lockdown can be lifted because the treatments are going to be there, not the vaccines but the treatments. The
take there was a couple of things I read which were, one, that I think it's the top 10 companies in the States are doing incredibly well and and everyone's kind of just that seems to be pulling the indices up. And so, but it seems to be a real gulf between those, like the Tesla in the motor industry, which is shooting up, and Ford, which is just had to go out to the market and ask for. I think the difference with the reason why Tesla is taking such a lead is because they've just opened a massive factory in China. Yeah. And
China, of course, is already drifting back to work, and car sales. And the Chinese economy, even in the last couple of weeks, has had a bounce. So Tesla are riding on the back of that, which of course Ford haven't got that luxury. So that's why Tesla is standing out.
The piece I read was basically saying the market has priced in that 2020 is going to be, rubbish, and that actually people's eyes are focused on which companies are going to do really well in 2021.
Yeah.
And a lot of web-based businesses like Amazon and Netflix and I think Microsoft is another one to watch. They're already doing really well, even in the midst of all of this. Procter and Gamble has had their best ever quarter, haven't they? I think Johnson and Johnson has had a really good
Well,
time.
Johnson Johnson have also got partnering up with another company for a COVID-19 treatment as well, aren't they?
Right, so it's kind of tech and pharmaceutical, biotech stuff that seems to be
Which is my two favourite sectors anyway. I've
leading the market. Yeah.
long since been buying in those sectors, and been a bear raider in the old bricks and mortar retailers.
Yes, because retail looks. I mean, there was a piece in the FT yesterday about retail, and it was going to hell in a handcart in the UK, certainly. And it seems to be, I mean, the effects of the COVID seem to be that there are going to be very big winners and very, very big losers across sectors. So, American tech, American pharmaceutical, that seems to be the thing that everyone says is doing well. Whereas your retailers in the UK, fashion retailers, for example, seem to be kind of dead ducks.
Well, let's look at a couple of. This is J.C. Penney, which is a massive brand in.
Yeah.
I'm not quite. I think it's not consumer staples, but it's certainly a big.
It's like a Debenhams, isn't it?
Yeah, it's like I think it's a department store. But I read somewhere, literally yesterday or today, they just filed for bankruptcy.
Well, Arcadia's going, isn't it? I mean,
yeah, Debenhams, Arcadia have just said, Philip Green's outfit are talking about 100 stores going. Debenhams are gone.
Yeah, Warehouse has gone, Oasis has gone.
Yeah, and the other one that I've been bear rating this one for about at least 4 years. Macy's.
Okay.
You can see all the way I've been tracking it back in 15. And any highs, subsequent highs, have been selling. And the one I've been tracking in the UK, although it's a good brand, it's still suffering. And I still think this is one to short as well. Next.
Wow. Yeah, but Next got their warehouse. Next, there was something again in this piece in the FT about Next. Next had to close its online business, and that I think that the move from Next is that they've managed to get their online business back up, which is actually more than 50% of the profits. So
yeah, but I'm just looking at the general picture. I'm thinking of just sort of standing back from the individual cases, or standing back from what Next are doing, and just getting ready for the next leg down. Basically, let's just start by looking at. Let's just go right back to the indices a second and just look at where we are on these indices, and then come back into the sector discussion. But here is the Dow daily on Fib to 2019, which is a typical way I like to handle my projections on indices. One of the things I like to do is just marry charts up to, if I'm looking at the daily, then I want to look at the previous year. If I'm looking at intra-week, and I want to marry it up with the previous week, etc., etc. So if we look at how this slammed down to a minus 161 extension, what I'm looking for is, if this is going to continue to pop, which at the moment it looks as if it is, if this continues to pop, then my money is going to be on either 26.4 for selling, or possibly as high as 27.4. So I'm looking for one of these zones to sell. If we are really bearish, then let me just pop this away a second. I just look at the actual foot range that we've just completed. Yeah, so perhaps a more relevant price level might be a move into 25,180 or just under that 27. So my money is on some further upside But as we get into May, particularly the good old adage, sell in May and go away, any push into these zones into back end of this month and into May could see the next leg down. And if that's the case, then I still keep, everything keeps pointing to me toward 15,000.
Wow.
Every time I look at my charts, every time I do some technical analysis, I keep coming up with 15,000. Whichever way I put the fibs or the trend lines or the measures I use, I keep 15k keeps jumping up at me. But so I think the ripple effect and the impact is all this joy will sort of potentially keep the market up for a while, punch it a bit higher, but ultimately we'll start to see another leg down. If we look at pure Elliott wave, let's see where we are with Elliott wave. So we've got a 1, 2, 3. Actually, let's take this leg 3 down here is too generous. So the 3, 4, 5. And so Mr. Elliott I think it's Robert Elliott in the 1930s said we get a 5 and a 3 and then a 3-wave correction. So that's the initial move. Then we get a 1, 2, potential 3-wave correction. And then you start the 5 again. And at the moment we are not, we are breaking that, and it's sitting above resistance. So all the time we do that, we could come and find that 25 or and possibly higher.
So you're basically saying it's a good time to go long on the Dow?
I just take very short-term views at the moment. I literally at the moment I'm sitting in trades for anything from a few hours to a few days at the moment.
Yeah, but in that time scale.
But in this sort of 4-hour chart, as we come into this week in April, then I would suggest that the momentum is the upside, and there still is some upside to be seen. Yeah.
Okay.
However, if we get a sell signal, even if a lot can depend on how the market opens. I mean, for example, last week we had a really big gap up in the indices, and that proved to be a marker for the whole 5 days trading. Let me just show you what I mean. If you look at let's look at a 2-hour chart. Let's take those fibs off. If you look at the way in which the market opened last week, where are we? So we gapped up and immediately dropped, and that 2-hour, well, that open range impacted the whole week, and ultimately Trump's speech after the market closed on Thursday just took us out of that, and then on Friday we dipped back in and then pulled right out into the close. So what I'm saying is, if I just keep a very, very close eye on how these indices start the week. Mm-hmm. So for example, if we were to, let's just kill that a second. If we were to let's say we gap down. Let's say I'm very bearish, and we see some evidence of some bearishness right into this market. If we gap down, into this level, for example, I would wait until that pushes up and then get short in a retracement, maybe anything from 60 to 100%, and then get heavily short and see if we can wind down and tail off. So last week, if you're looking for short-term mood and momentum, then just take keep a close eye on what these indices are doing and how they react.
But by contrast, if we stay in that zone, the higher zone that we've just gone into, so if we stay above 24,000 next week, then probably then it's a good time to go long.
I tell you what, I would, you know what, I wouldn't mind betting that the last week's zone, it has an impact on this coming week. I wouldn't mind betting we sort of dip back into that.
Uh-huh.
If we're bullish, then we might sort of spring out again and start winding up.
So probably a good time to look at it Tuesday-ish. I mean, look at it on
Well,
Monday.
I would make a big. I would zone that. My typical sort of routine is to sit there and zone that open, but and particularly see how we react on Monday, and then if we're holding up, however we open, and if we sustain any sort of push higher or flat ranges, if we sustain those and can just eke higher into Monday and into Tuesday, then I would suggest the rest of the week overall could be bullish.
Uh-huh. And surely a lot of it also depends on what news comes out, because, for example, you know, they're starting the trials of the vaccine next week, aren't they, in Oxford? And if there's other stuff,
sorry, you're saying?
They're starting the trials of the vaccine next week in Oxford, and if there's other stuff that is announced next week, you know, if somebody else says, "Oh, we've just found a cure," or that's surely going to push the market into more bullish territory, isn't it?
It does, but and we had a bit of an unexpected announcement with Trump, didn't we, after the market on Thursday? But the reaction to Trump was pretty much the market had caught that before Trump had made that announcement anyway. I mean, yes, I mean, you're absolutely right. I mean, if the market at the moment is pricing good news in, it's pricing all the work that these big farmers are doing, particularly Gilead, the pricing it in. So I wouldn't sit there. I don't sit there trading thinking, or maybe we'll get a big bit of news, or maybe we won't. I'd simply study the open and then plot it as the week unfolds, particularly Monday, Tuesday. So I don't think you can afford to say, well, we might get an announcement on this, or might get an announcement on that. Just continually, the market is so technical these days. I think you can just that the market will price it in as the week unfolds, and you just need to hang around and plot these charts and get an idea of what the market's pricing in, but for that particular week.
Can you please have a look at the Nasdaq, because I've
heard
the Nasdaq is doing really well.
To my way of thinking, what the Nasdaq does, the rest of the market follows. Yeah, the Nasdaq is a leader. Obviously, because we're so, the world is so technically dominated, and this is the technical indice overall. So this is sitting up of all the indices. This is sitting up by far the best. And look at the zone. We've got this huge resistance zone just ahead of us, that 9,030. And we struggled on Friday, understandably, after a good week anyway. So I think one of the reasons why I got that pink zone in there is because I think whichever way we come out of that pink zone could determine, whether we can go back to these highs or not. In terms of volume, you can quite often take quite a lot of lead from where the volume's going. Obviously, we've come down here on decent volume. We came up on a seller's volume, and here we've actually come up on actually below average levels here. So if this is what makes me think that this is maybe the market's not quite as happy as people think it is. For that, I would want to see that market going up. So I'm going to get this pink volume here. I'd want to see these volumes that we saw in prior to all this breakdown coming back, and we're seeing lower volumes here. So I'm suspicious that this rise, and we're somewhat divergent with volume there. So that makes me suspicious that this is maybe not sustainable as people think it is. And in terms of, back to just pure technicals again, we're sort of, what we've got is, 1, 2, whoops, okay, it doesn't matter. 1, 2, 3, 4, 5, 1, 2, 3. So this in my book, this just classifies as the end of the move. So if we start closing under 8,700, that would give me really give me the thumbs up to get swing trade short on the Dow, which is a market I much prefer to trade. So bottom line of the story is, whichever way I think, whatever way you're coming out of this little range.
Say that last part again, please. If we start on 8,700.
I think this pink range is going to be the telltale sign. So if we close under this range, I will get swing trade short on the Dow. I would be very bearish if this Nasdaq starts closing under 8,700.
Oh, okay.
Because I think this 5 and 3-way move coming up on lower volume, what looks like unsustainable volume, could well see us start to get at least see some profit taking. And if you look at some of the big stocks that are propping this up, let's take a look at the Netflixes and the Teslas. Netflix has come off a 127 extension. So that lower close, well, that's actually a sell signal to me. That's a new high in the range and an immediate lower close. That's a sell signal. If you look at Tesla, that's certainly at a resistance area. That price up there is a tough area for that to get through. That'll be extremely bullish if we start closing above 800 on Tesla. The oscillator is bouncing off a very high level. We've had a spike in volume, but overall volumes are not. Actually, volumes are okay. So we climbed up here in volume, got a reasonable height up here on the reversal. We only saw a spike higher up here. Otherwise, we were drifting a little lower on that run up. I think these markets are at a really, really interesting point, is what I'm trying to get at. Trump's announcement about his death. Well, we all knew he was desperate to get the US open again anyway. But that message that he gave out, combined with what all the main farmers are saying, has certainly got the Americans coming back in again at the very least.
So your tactic would be to wait and see what happens on Monday, and then really start to put your trades in on Tuesday.
Yes.
Yeah. Okay.
Yes.
Yeah.
I would. Let's have a look at the data that's due this week. I know we've got UK jobs on Tuesday, European trade balance Monday. I've got core durable goods in the US. Where have I seen that? Durable goods is Friday. UK retail sales Friday. There's quite a lot to get through. And Thursday sees European-wide manufacturing data. That's going to be interesting because we're already projecting some pretty lousy numbers. The data's not all bad. I mean, some of the data that's coming out has been surprisingly good considering the extent of the lockdown. But yeah, I'm looking. I'm very, very interested to see what the market does when the futures market opens for the Asian market tonight, and to see the US reaction on Monday to all this news and the bounce we had last week. But like I said, but that close on the Dow on Thursday was really bullish, closing above that key fib level on Thursday was all we've done on Friday is just trod water really. Another little indicator you sometimes get is the way in which the futures market reacts to the last hour's trading, and they actually got quite a significant push into the last hour on Friday, and I haven't seen that in a long time. We had that a few weeks back. Most Fridays in recent weeks, we've seen some heavy selling into the close, and the brokers whacking up the margins. We didn't get that on Friday. We actually saw at least a 200-300 pip bounce on Friday, so that could be again another little nudge that optimism is.
That's because everybody wants to get their positions.
Yeah, if you find traders are going long into the weekend, that to me says that overall the big money is happy to get in.
Okay. Can you please have a look at banks?
Yeah.
So that's one that I thought was quite interesting.
Okay. What if we look? And if we backtrack now, having sort of talked extensively about the indices, we'll start looking at banks, and then we'll backtrack again into retail and some of the other stocks we looked at, and then I'm going to look at some of the stocks I'm interested in on the healthcare side, okay, and a few on the tech side as well. Right, let's look at UK banks we're interested in.
I'll look at American Express because I think that's quite an interesting one.
Amex, okay. They're a big Dow component anyway, so that's a good one to look at. Okay, that looks all right. That looks as if we're certainly due another leg up. We're sitting at just on moving averages alone. We're sitting above the 20-day average. Anybody else wants to turn their mic on, by all means. Just see them. Where's the message? I've lost my message box. Hang on. For some weird reason, I can't see my. Oh, there it is. There it is. Yes, it is recorded. Yeah. You've not missed a lot because we're going to backtrack Marzina anyway. So stay put. It is recorded. You'll see all the recording, but we're going to backtrack over some of the things we've already talked about anyway. Yeah, Amex looks as if. I'll show you another one I like in this sector as well. That's all the time we can hold that 83.20. Oops, let me get rid of that. All the time we're holding that 83.20, that to me looks as if we could come back to 100. Are you in this one?
Yeah, I went in on Friday. What I liked about Amex as well is that it's got a lot of space. It's got a lot of upside, whereas the others, Visa and MasterCard, seem to be pretty much back to where, they've got a lot. They're kind of coming back halfway up to where they were before. Do you see what I mean? Yeah,
it ticks a lot of boxes. You can see the momentum to the downside has drifted away on that oscillator. Volume is picking up. That ticks a lot of boxes for me. I think that's got. I think you can squeeze a good sort of potential 10-20% move out of that.
Okay.
I think that I like that. at the moment.
Lloyds Bank, you said last week. If
Yeah,
Lloyds,
while on the subject of it, let's just look at a couple of other Americans banks first. JP Morgan, that's even slightly better than Amex. Not much in it. Goldman's, a good bellwether. Goldman's, struggling. That's gone a lot more distance anyway. That's done a 50% retracement on Thursday. So if that can hold 175, that looks as if we could come and see 204 on that, maybe higher.
what number the numbers for JP Morgan, please?
JP Morgan, I would suggest this chart does use data from IG, so it's a retail chart rather than a proper stock chart. I would, but anyway, I'll cover that in a minute. Any pullback into 92, 93, I think we'll potentially see 102, and if the markets really get chirpy, that could be 110. Again, volumes are good. Momentum to the downside has really come out of it. Oscillators just under the midline, but that's a good 2 days. Thursday, Friday's price action was really good, and so we had a 1, 2, 3, 4. We look as if wave 5 could take us, like I said, either into 102, but possibly 110. But we've got to for that to work, we've got to close under 100, above 100. If we struggle here and close under 92, I'd be very wary. We've got to, in the first half of the week, minimum hold 92. Any dip under there, and that could fall off. But that's over. It's looking good. It does appear to be more upside in that. Let's have a look. What other? Okay, let's go to the British banks then. Let's switch over to British banks. Let's go to Barclays first. I much prefer Barclays. They've got one of the best balance sheets in the UK in this sector, and that is really struggling.
Yeah.
There's a massive mismatch between well, certainly UK and US stocks. That's wow. That's holding up. It's holding that 20-day average, but it's got nowhere near the follow. If you look at the volume, it's got just not got the pickup in volume that the US stocks have got in the same sector.
It's also the price is jumping all over the place, isn't it?
It's really, and that's quite weak. That's very weak. The fact we couldn't hold above 98 was a big clue when we ran into 98 on first half of the week and started dropping back. That was a signal that was not happy. If we come back to 85, 87 and hold, that might do something to the upside. But no, that's not good. Lloyd's.
Last week you said if Lloyd's could hold 30,
right,
we'll go up to 35.
That's almost an identical pattern, isn't it? So, the only thing, this looks slightly better than in the volume pickup. Is marginally better. We've really got to see some volume coming into these stocks, otherwise they're just going to roll over. Are you in Lloyd's at the moment?
Yeah, in a small way.
Okay.
I think UK banks are a much worse bet because they just seem to be. And Deutsche Bank was another one that had a run.
Well, Deutsche Bank's had a lot of problems over the last year or two, anyway.
Yeah.
Let's have a look. For a start, they had a lot of exposure to Italy, didn't they?
Yeah, it was.
Wow, that was a hell of a sale on the 5th on Wednesday, wasn't it?
Yeah.
It's an interesting pattern. It's in an apex. It's a very interesting pattern. If we close under that pattern and close under 560, that's in serious trouble. Or if we can stay in here, maybe even if we dip out, as long as we come back in, we could do something. But yeah, I mean, if we start closing above 650, I think that could recover to maybe 7 or 8. It's just a question of whether we can sustain this and start closing higher. But pretty
How high
feeble
it was
chart.
at 10 in February, huh?
Say that again?
It was at 10 euros in February.
Yeah.
My
Had
gosh.
a really nice bounce
That would have been a
into
short, wouldn't it?
a really nice bounce up there. Yeah, it's the big question mark, isn't it? Hanging over the whole market. You know, these banks are really they're literally at the coalface, aren't they? Because if the market is over optimistic, and the likes of Gilead and Pfizer and Eli, Eli Lilly can't come up with the goods, then I think the markets could sort of give up again. But yeah, pure technicals, that's right on the edge. Heavy selling middle last week, didn't really, very poor close on Friday. The jury's out on that one, and I have to say the path of least resistance at the moment is lower.
Okay. What about BT? That was one that we looked at.
Yeah, BT. I'm tracking BT very closely on a personal level because I would start to dip my toe in the water on another dip here. I'm sort of waiting to see if we can come and see 115, 110, 115. However, if it starts closing up higher on Friday, on Monday, I might pay a higher price for that and try and get in, because if we can hold this area here, I just think it's a good utility with, it's got a pretty decent slice of the market. It's a good product. It's a good brand. It's a good company.
And it should follow the American Netflix. It should follow that tech bounce.
Yeah.
In the States, shouldn't it? Theoretically.
But look at the volumes. I mean, it's just not got the volumes are falling off. It's, every time it bounces on very low volume. That last little bounce didn't see much of a pickup or much of a follow through. So again, the jury's out. I'm give me a personal track of that one anyway. But if we came down, for me, I would love to see that come down to 110, 115 and hold, and then I would buy. If it starts the week very well, I would buy. I would pay a higher price. Otherwise, it's just on my watch list still. Ones I do like in the UK is Fresnillo. I'd love this has had a good run already. So if you weren't in on this, then on the 16th of March, or even you're into that week of the 23rd, then you're too late. I think the pound's picked up. This stock really loves it when the gold and the dollar are strong, because that's a double whammy for a UK mining company, or certainly listed on the UK stock exchange, with a strong dollar and a strong gold. That's a double whammy. So with the pound picking up some, or at least recovering a little bit, that's taken the sting out of this one. So which is good, because I need a pullback. Ideally, I'd want to buy down there around about the 600, 625 on Fresnillo. And ultimately, I think this, if it gets a head of steam, that could go up back up to July's highs. But that's but I would want to sort of hold fast and get a much better price if I can. We haven't talked about, coming back to banks for a second, because you've got Standard Chartered down here. Wow, that's even uglier, isn't it? Okay, well, I'm not going to touch that one anytime soon. Way too late to short it, and there's no reason to buy it at the moment. So other UK stocks, like I said, I don't really care what people say about Next, about whether their online's fully functioning or not. I just like shorting stocks like Next. In a market where people haven't got the money to pay for, well, may not have a good money to pay for good clothes. I think like the Primark are going to sell even more clothes, and these guys are going to struggle.
Is it the chief executive Next said nobody buys a new dress to stay in? I think that's
Yeah.
How it describes. I think it's, yeah, that's
so it's interesting how
social distancing is going to impact on them for years.
Yeah.
Nobody's out shopping. Yeah.
I mean, even when we had a pop, there's a gap up here, and they just took the gap resistance, right? They didn't gap fill it, they just took the gap resistance and started selling it again. So I would love to see that pop up to 50, 53. And maybe if the markets get happy for a while and that starts to pop up, I would get short again. I would try and short that. Let's look at
JD Sports. JD Sports is quite interesting.
JD Sports. Okay.
My cash.
That's not one I've looked at it recently, but not very. I think we're going to see 400 quite quickly. I'll ask you in a minute whether you're bullish or bearish. Let me just look at this a second. Yeah, so this is why these markets are in such an interesting position, which is reflected in this stock. Here we are, just snookered in this little apex. But again, I mean, for my money, this is just selling on highs. This, any rallies are just selling. Pops up, they drag it down. Pops up, they drag it down. So if we start closing under here on Monday, I think we're going to see back down to 400 pretty quick. And if the market continues with a theme of selling, then I think we could see the lows and lower. Ultimately, I wouldn't be at all surprised to see that down at 110 in about mid to late summer. Wow. Maybe earlier, maybe a lot earlier.
Wow.
That's actually, I'm going to put that on my bear radar list. Watch for.
You mentioned ITV to short.
Yeah, I in a market like this,
I think basket case.
Yeah, I again, this has been a good opportunity to bear raid this in the past anyway, even in the run up to this virus. Look at that, you gap up, and that gap up was the start of the sell-off, but that was way back in mid-December. That shows you how bearish it was.
It's almost
hardly surprisingly.
It's almost the opposite of Netflix, isn't it?
Yeah. I think, well, their business model just isn't. I don't think it's in this sort of environment. I personally hate watching ITV. I just can't stand the ads.
Yeah.
And the only time I'll ever watch ITV is if I record something. So I never watch the ads. So that's not a very viable business to me. And I do like to trade businesses that I understand.
Yeah.
There are times when I will be purely technical, but overall, I much prefer to trade businesses that I understand. I understand pharmaceuticals. I understand biotechs to a large extent. I did a lot of work with UK small caps and particularly biotechs at one stage. So I understand about the phases their products go through and the fundraising they go through and all the rest of it. But wow, I mean, that ITV even looks rough at 76 at this level. It even looks as if 76 could be a good place to get short at the moment. And I can see that rolling over. I can see that at the very least coming back to 50, 50, 55, 50. And if it doesn't hold that, then that's potentially lower. Right, so that's going some, suggesting it could go under there. But so take it once. I think there are better shorts out there. I wouldn't be inclined to short that now at the moment, not unless that spikes up. I would much rather wait and see that jump up there. But the thing is, at the moment, I don't see it doing it. So if that jumped up there, let's say, for example, in middle to late summer, if the markets get happy and that jumps up there middle to late summer, I would like, and we subsequently get a sell signal, I would short that. In the meantime, but looks lower, but could go either way. Let's just to sidetrack for a moment and just look at some of these, because the sales volumes in some of these supermarkets. Okay, the clothes side's doing rough, but they're selling an awful lot of food these days. Alcohol and food is doing really well in these supermarkets. It's just the clothes, I saw a quote yesterday from an American trader. I thought, wow, that really sort of sums it up. He said, it's interesting that the markets are crashing because all we're buying are the things we need.
Yeah.
Yeah, we're crashing because the consumer is only buying what they need. And despite being in the markets, most days, that's my view. I don't actually like consumerism. I don't like, I have to have a reason to buy something. I do think people have got these massive sort of habits, particularly the use of the motor vehicle. Every jump, my neighbour jumps in the car to buy a pint of milk. I think it's just bloody ridiculous.
I think, though, is it not true that top-end luxury like Louis Vuitton, aren't they? They had a good week, didn't they? I think that kind of the middle of the market is not good, but I think the Chinese have started buying luxury. The really rich.
I saw some.
That's why Tesla's doing well, because they're the kind of people who buy Tesla aren't worried about money.
Yeah.
So it could just be the sort of mid-range luxury, like buying a new dress in Next, for example. People will go out, but the top ends might carry on being okay.
I mean, I think that's an interesting area for Sainsbury's. If that drops into 1.95, I'd be interested to pick up some, because the volume is that big drop. Volumes actually started to pick up there. Not huge. Well, quite some down here. It popped up here on much lower volume. So it stands to reason, a higher buyer volume, and this is dipping into this area here, that there's a chance that we could get some sort of bigger, wider recovery in the price anyway. I'm not suggesting that could fly, but it's a good one to sort of have in the back pocket if the markets do hold up. So I'm governed by what the indices are doing. As far as I'm concerned, we're into the US earnings season. Cyclically, you would expect the market to pick up into next month and then sell anyway. So it stands to reason that at this time of the year, you wouldn't want to get heavily long with a report season in an incredible demand slump. with that cyclical time of the year about around the corner anyway. Why would you want to get heavily long when particularly European lockdowns continue, consumer spending power is constrained, and a lot of interesting to see how the job numbers pan out, particularly in the UK on Tuesday. I'm short, relatively short-termism anyway, but I'm even more short-termism at the moment.
But I would have thought that this year will be different, because I wonder if people are going to take summer holidays, having had.
Yeah.
I mean, our company's going to let people take annual leave when they go back, even.
That's a really good point. Yeah, how are companies going to handle this?
I mean, I think people are entitled to it legally, but I just question whether anyone's got the brass neck to go in and say, right, well, I just had 6 weeks of lockdown and now I want my 2 weeks holiday, please.
Yeah, good. I think the word is, that you use. Would they dare to take holiday? Because
especially if the company's going to be struggling. So I think this summer may be a very different summer to other summers.
Yeah.
And certainly hotels are saying they probably won't. I know I own a hotel in the Caribbean, and they're predicting that nothing's going to come back until the second quarter 2021.
Yeah.
Because they don't think people will go on holiday.
Well, this is a really telling chart. This is Chewy on the LSE, and last week it touched 425 and immediately sold, and we finished the week under the 20-day average anyway. So these guys are on. I think they're on furlough, aren't they? I'm sure all employees are on furlough on this. So that looks lower. I mean, there's hardly any higher closes on that in recent weeks. So if we
short, then isn't it?
That's if we close under 310 first half of the week, that could easily see 224 and lower. I could see that coming into but potentially breaking that 200.
Or going under completely.
Or going under. Yeah, it's interesting that my fibs is quoting me minus 17.
Can you
minus one.
Have a look at IAG, because that had a good week. That's gone up to 252.
IAG.
That's British Airways.
Oh, right. Okay.
So again, I think it seems to be a bit like the text. It seems like
we need to look at EasyJet as well.
Yeah,
so
the rich, but my take is the rich seem to be getting richer and the poor seem to be getting poorer. So if you take the TUI, as the poor to British Airways is, and Virgin Atlantic is desperately struggling because the government's told them they're not going to get their 500 million. So
I think the country would be an uproar if the likes of Virgin Airways get any kind of bailout.
Yeah, well, this was mentioned, but I think that Virgin. IAG had quite a. It's heading and it's going up. It was sort of.
I would assume, I'm just sort of making an assumption here, not a technical analysis. I would assume that if Trump believes that he can start lifting the lockdown, particularly with with previous conversations about Gilead and so on, this one could be a good one to try and jump on the back of for the long side. We've got a gap up there at 326. I mean, if it's neutral at the moment, but there's certainly signs that
the highs are pushing up, aren't they?
Yeah,
higher.
The oscillator's losing its sell momentum and potentially going to break above that midline on higher volume. So this could be a good one to nibble at on the long side.
I think the story with that is that if other airlines go under, BA is going to get the takeoff slots at Heathrow, which was always its biggest constraint.
Yeah.
And it looks like Norwegian may finally go under, which was the thorn in their side. So I think people are buying 2021 again and saying, And also, would the British government allow the flag carrier to go under? Although they won't give Virgin any money, they keep giving BA these repatriation flights and
Yeah.
slipping the money left, right, and centre. I think that there's probably ways that BA will survive. So I think you're right. That's a good.
Yeah. This is.
There was 700 before the dip, weren't they?
Yeah.
And
680. This chart says 685 at the high.
Yeah.
Let's see let me get a bit more data on the books a second. Hang on. Yeah. Okay. Let's take a look at that most recent high and the most recent very low. Yeah. So that we're in the in the back end of, well, certainly into the second half of April. So this 250 is going to be key. If the market, if that holds 250 in the back end of this month, that's a signal that we could potentially at least have a visit to 300, 330. It may just linger. It's going to, this whole thing is going to take a long time to map out. It could just be this just grinds higher and gets very choppy, but overall grinds higher. But yeah, I think Chewy took a big lift on the back of Thomas Cook's demise, didn't it? So you could see that sort of Chewy effect on, as you say, on this one because of the weakness of the competitors.
They also had a very big. They had €6 billion cash balance, didn't they, going into this?
Yeah.
So they're ready to to face the storm. But I think the other one.
But that's a very interesting chart. I mean, that's definitely worth. The daily is flaky, and hovering and floating, but yeah, that's going to be very interesting.
I bought that one exactly at the bottom, so I bought it, I think, 199.
Okay.
So I'm kind of holding that one. That looks like quite a good one.
Yeah, I like your idea, and yeah, let's see what happens in the start of the week, in the first half of the week.
So have a quick look at EasyJet.
Yeah, thanks for reminding me. Yeah, I was going to go to EasyJet, wasn't I? Very similar. Very similar. In fact, there has been a bigger buying pattern on that, hasn't there? When they did leap.
They made that big announcement, though, didn't they? I think that's what that was to do with.
So 580 is going to be crucial with this one. Whatever happens, if we can come back to 580 and hold, then we can backfill at some stage into 770. My daughter lives in Berlin. She's obviously back here at the moment, and there's a voucher for EasyJet. So we're all sort of
it doesn't go.
Just sitting around waiting to see what happens. Obviously, Germany has coped with the virus a heck of a lot better than the UK has, because Boris was way too bloody slow. That's another interesting one. The most likely scenario, just eyeballing it. I've just seen you've typed in. I'll come to that in a minute, Howard. Thanks for your question. Most likely scenario is we just carry on hovering around here, and then maybe dip underneath it potentially. But if we can overall, if we can hold this area here and get some clarity as to what airlines can do soon, we could get that could be another one to pop with IAG.
Mm-hmm. That's my sense of it as well. Because they've said that they've got enough cash to get them through the next 7, 8, 9 months, even if all the planes are grounded. And I think that means that people again are looking towards 2021. I think that seems to be what most people in the market are doing, buying now for 2021, not too much about 2020, and just looking at people's balance sheets and see who's likely to be on the ground. Which is why TUI, I think, is probably shorting, isn't it? Because people are kind of thinking they're probably gone.
I think, I mean, Joe Public have got to sit on their hands. Haven't got any choice from a point of view of the lockdown and cash, preserving valuable family capital. So yeah, I would go along with that. Let's have a look at what Ocado's doing, because that had this massive leap, and there's got sort of profit taking at the moment. That's a bit too wild for me. I would, well, certainly where we are now, if we settled down and started holding these lower levels. I was a bear raider of Chewy at one stage, because they just had no profits for quite a while, didn't they? Anyway,
I still think they've got a good past. I don't think they've got much future.
You don't think they got? You don't think they got much future?
I think the package holiday, the whole thing that they sell.
Yeah.
You know, Airbnb is much bigger, isn't it? I think now than they are.
Yeah.
You know, it's that model that you can buy your own flight cheap, that you can get somewhere to stay cheap. You know, and you don't need to pay for that kind of that package. And I think that people are buying. The whole kind of market moved away from them anyway. So
yeah.
It's a little bit like ITV. I see TUI and ITV being kind of yesterday's model of how people operated within a particular market, whereas I'm seeing, something like there are, and I think it's what you said earlier, that you've got to understand a little bit about the business, and you can see that something like BA, I can't see that politically the government would let BA or Barclays Bank or Lloyds Bank go under. They just
I think, as well.
Wrong signals.
Also, I think it'll be a massive psychological blow to UK PLC and the consumer if they let those brands go.
The flag carrier. Whereas if Virgin Atlantic went under, I think everybody would think it was funny.
Yeah.
Sorry to say it, but people think he sued the NHS and he doesn't pay any tax, and that seems to be what everybody is saying.
Let's move on a bit fast, because time's really ticking away, and I've got some questions here I've not answered yet. So I was just going to switch on to what's going on in this fantastic healthcare sector at the moment in the US. This is one example. This is Regeneron. What a breakout! So it looked really, really messy here, but I think the key to with a stock like this is the market will mess you around and stop you out and try and shake you out. But look how the market reacted to that particular price level, 450. That was always going to be key with this particular price, because it was the high of March 19. So typically, and this is what happened to silver when silver reversed a couple of years back, they dip it under a major price level. But the key to this was on the 26th of March when they closed it immediately above. So the signal, the best signal to buy there, in recent weeks, was certainly that 26th. Pulls back to 443, 445 the next day, and then we've not really. They tried to shake you out a little bit here, but that breakout was not surprising given the way in which that price reacted and the volume held up. So lots of boxes to tick on that one, but particularly on that 26th of March. And even as it was holding this 488, once that price level was held at 440 area, and then they started holding 484, the writing was on the wall for that one to go higher. So now this could still be a buy at 540, because we've got. No, we haven't got any more history up there. Let's have a look. Let's look at some examples that maybe have not broke. Okay, so we've got some history up there at 607. So we look as if we could come and see 607 and even higher, potentially go higher. Right, let's look at some more examples of some that may still break. I've got this Vanda. This Vanda looks good. A lot of very close resistance. So it's been as low as 711. It's currently 11.5. there's a decent chance, I mean, it may go back to 10, around about the 10 area. If we do, I would certainly buy some on the 10, and I would buy more if it started to break above that 11. I'm going to look out for 10 on Vanda, VNDA. Medtronic is one that I've bought and sold a lot recently. I'm currently just trying to ride that one out. That looks if we can see 110 into this coming week. Very good brand. I've got extensive products in the diabetes market. And Moderna, this is a COVID-19 issue. That's too wild. I would, if that settles down, I'll take a look at it, but that's too wild. Johnson & Johnson. Still time to get in it, I think. Wow, that's a tough place to get in that. If it has a bad hair day and it gets close to 140, I'd be interested. Gilead, we talked about Gilead a lot anyway. That's if you're not in this, you tell you what, you could put an order out for a pullback to that one. Put an order out for sort of 75, 78. See if you get taken in. Otherwise, let it settle down and see where we are a few days down the line. No, they're my main techs. Any others on there that I've missed?
What about GlaxoSmithKline?
Say it again.
GlaxoSmithKline, is that worth looking at?
Yeah, Pfizer is not. I'll look at Glaxo in a minute. Let's just have a look at Pfizer. Come on, there he is. Yeah, I think this is a good one. This is a cheapie, so you could try and pick up a dip on this one and tuck it away. I think if we get a bad day, we could potentially see 34, 35 on that one. They've had some issues as well. I can't remember the stories behind that, but there was I should know that there were some issues that they were grappling with. Glaxo. We'll look at silver and gold. Let's look at Glaxo on the LSE. So that's gapped up and closed lower. That's holding up very well. I would.
They're just getting involved in COVID-19 testing, aren't they?
Yeah.
They're going to do a lot of 30,000.
I would try and be patient with that one and see if you can pick up something like anything close to 16 or 1620, 1625. I'd be patient with that one. I wouldn't chase that. I'm going to wait and sit back and see if they can drag that down lower. Right, let's look at this. Time's really getting on, so I'll just look at some gold and silver. So indices are holding up, and gold. That's a potentially another sign that the markets are happier. If we close back above 17, then pretty quick. Otherwise, at this stage, I think we could come all the way back to 1640. At this stage, now closing underneath this March 9 high was very bearish. Now let's look at the industrial silver as opposed to the currency gold. Let's look at the industrial silver. I'm going to reconfigure this one, I think. Hang on a second. No, I'm not. I'm going to leave that. My feeling is that could come back to see at maybe not soon, maybe over the coming day, maybe over a week or so. Further on down the line, I think that will come back to 1430 at this stage. Because we bumped into a lot of resistance and we're dropping back. If we come back to 1480, if we dip under that big 1500, if we dip into sort of 1466, 1470 and hold, I think that's got potential. Otherwise, that could come all the way back to 1430. Of course, if we get a spring in our step and immediately close above 1550, then that's going back up. I think, but I would. It is an interesting chart. I personally would want that to come back to 1450, 1470 area somewhere before buying that. Anybody else got a view on that? Then let me know. I was talking about. I spent a lot of time looking at the softs on Friday. The softs meaning soft commodities, grains, etc. Now there is a drought in the US already. I meant to check when the crop reports are out, and I didn't go and do that. At the moment, this is obviously weak, but you can see I've isolated this area at $8.30. There was an abundance of beans in the last couple of seasons, but I am just wondering if this is overdue a bounce. So I'm looking, if that pops back into that support area and holds around about anything from $8 to $8.25, $8.30, I'm going to buy that. Wheat in the meantime is significantly better. Just call up wheat. Yeah, it's holding up in terms of its overall price performance. It's better. I didn't mean that to say that it's bullish. See, let's just look at basic support and resistance, because that price 1537, 1535, 1530. So we're underneath support. It's not a great chart. It's not a great chart. That doesn't make me want to buy that at the moment. So we're holding a fib area. I'm going to take my lead off of beans. I'm going to leave wheat. Obviously keep an eye on wheat, but keep a much closer eye on beans. I much prefer beans anyway. Purely because I've always traded beans on the futures market. Well, I say always. Wheat coming down, yeah. Interesting that it's come down and held that fib zone, that 525. So if we close back above 537, literally on tomorrow, a close above that 537 tomorrow would symbolize that is ready to potentially get back to 590.60, and a run in wheat would take us to 640 plus. That I think these charts look interesting. Orange juice, no, I'm not touching orange juice. It's okay. Rough rice is holding up, so these softs are doing well. Cotton, it's getting interesting. Cocoa has had a good run. Cocoa has had a good blast up. A couple of decent blasts. Now, you know what? I like the way that's looking. You know, I want to be careful and buy closer to that 18 if I can. I'll keep an eye on that. I forgot to look at gas. Yeah, take a look at gas. And anybody else wants to look at anything else, then let me know. So a great breakup on Tuesday the 7th into resistance, and another deepish retracement. These averages are looking as if they're reconnecting to the upside. As you see from my chart, I think a 2021 is possible. I think if we got up there, I would definitely get out pretty quick, because if we get another touch of that, and there's a lot of bears up there, I think they could ping down pretty quickly if we do get up there.
Isn't gas going to be similar to oil though? That there's questions about the level of demand.
Yes.
Yeah.
It's all about cyclically. This is not we have seen pushes higher in this time of year. It's just because we're coming out of winter doesn't mean to say gas isn't worth buying. But you're absolutely right. The
worldwide demand for all energy products is going to be less because people aren't driving so much, and
it's the factories are not demanding the energies. That's the issue, isn't it? The fact there are furnaces, etc., that would run on gas, and some of them are closing down or have closed down. So it's already we haven't actually, I was going to say 3 touches. We've not even touched that resistance trend line, and already we sort of backed off of that. So be careful. Be careful with gas. Again, as I said so many times today, it's about how the market kicks off on Monday, Tuesday, this particularly Monday, as to whether there's going to be any further follow through from a lot of buying mid to second half of last week. Right, well, let's leave it there, because I've been talking for an hour and a half. Wow. Any other major points or really interesting stocks that you've got on your belts before I go, or are we covered? There's another bit. Let's have a look at Apple. Let's finish on Apple.
Oh, Apple's gone tanking, I heard.
If ever there's a bellwether, then for the Nasdaq, then Apple's it.
Yeah, but Apple, was it Chase said that you should sell them? I think.
You phased out. Can you repeat that?
I think Chase Bank or something gave a sell advice on
right.
Apple. That was late on Friday, and that's why it's tanked.
Yeah, well,
they're selling. They're advising.
It's a sell signal. It's not. It's marginal. We just about matched Friday's selling, matched Friday's buying. So it's marginal. I would suggest that.
So it's Goldman Sachs. Goldman Sachs said now is the time to sell Apple. Forecast 20% drop from the current level.
Right.
Goldman Sachs downgraded Apple shares to sell on Friday. It lowered its price target down to 233, implying a nearly 20% drop from Thursday's close. So that's what Goldman's is suggesting. It's going to tank.
Right. Well, the fibs and the volume. The oscillators high. That was a major. That 295 was a major error anyway. On just the technicals alone. So looks as if we're going to see 256.
Do you think it's worth shorting it?
There are certain things I do not short. I don't short oil, but there has been fantastic opportunities to short oil. But anyway, I don't short oil. I could not bring myself to short Apple. I think my attitude is there are much better shorts out there than a cash rich organization like Apple. So personally, I wouldn't short it, but it does look as if it definitely looks as if it's going to come and see 250, 256 sometime soon. And
it might be worth going long on it when it gets down there.
if it holds, again, I've not traded Apple a lot. I mean, I would be more than happy to buy these dips here. The trouble is with Apple now, for me, is some of these bars are quite big. Some of these ranges are quite big. It's a relatively expensive stock. I'm not saying price earnings ratio. I mean, I just prefer. I like stocks that are sort of $50, $60 or maybe $100, $120. So 280, 250, 280. I can get more bang for my buck and potentially bigger moves from healthcare and biotechs that are cheaper stocks.
Mm-hmm.
So that's the main reason why I wouldn't short it, because it's so cash rich, and I think there are better charts out there basically.
Okay.
But anybody who's trading it, I would that the technicals say 250, 260 sometime soon, and who knows, maybe lower then. Particularly if if the brokers are not backing it. Good. Okay. I'll fold up there. Thanks very much for your input. That's interesting.
Excellent. Thank you. Really helpful.
Great session, and I will be here 6 p.m. on Wednesday.
Thank you. Can anyone else? Can other people? Are you okay with everybody talking on the microphones?
Yeah, no, fine. No, that's great.
Yeah.
Anybody else who wants to come in on Wednesday and put the mic on, great.
Thank you.
No,
Thanks.
that's fine. It's good to have the feedback and the and cross-reference views and any research anybody's done. That's great.
I'll speak to you on Wednesday. We're all a lot richer then.
See you then. Thanks, everybody.
Bye.
Bye for now.